Good morning and welcome to Market Day Report. I'm Chris Swift. It was a pretty soft night last night coming into the grain markets. Let's take a look and see if there's anything really exciting to look at this morning as we get ready for the opening bell. Down 2.5 on that March contract at 4.15 even. The May down 2.5 at 4.27.5. And the December down 3 at 4.60 even. And now that we're in the March time frame, all those contracts come in and right around, I think, the 13th or 14th of this month is when they expire. On the bean market, the July down 4 1/4 at 11.61 even. The August down 3 3/4 at 11.58. Let's take a look at new crop November and see what it was doing. I know that it had been a little bit softer as well. And if we can get it to come up, there it is. So now we got the November contract. It is down 2 1/4, so not that much, but not that far off of the lows either at 11.44 even. Take a look and see what our Chicago wheat has been really soft, set new contract lows in some of the months last week, down 10 1/4 on the May contract at 5.53 3/4. The July wheat down 10 at 5.57 1/4, all the way out to December at 5.81 1/4, down 9. And Kansas City hard red winter wheat, softer as well. The May contract down 10 at 5.70 1/4. The July, this new crop, 5.58.5, down 8.5. And the December down 7 3/4 at 5.84 even. And we'll take a look here at spring wheat and see what it's up to. And spring wheat, a little bit softer as well, down 5.5 on the May at 6.54 even. New crop, that's not new crop. July, 6.58.5, down 4 1/4. New crop December spring wheat, 6.81 3/4, unchanged. And we'll look at one more market real quick, and this is the diesel fuel market in preparation for our next guest coming up. And it's not up that much, but I got April up, looks like about 7 cents or 7/10 of a cent. May up 4. It's just practically unchanged on the day. But with that, I want to invite my guest in, Darin Newsom. Darin was with Bar Chart. And Darin, there's a couple of things out there that are of interest this morning. One, you and I talked about that weather chart that Tim was showing earlier. And then after that, we discussed a little bit about the diesel fuel and some of the things that are going on there. Help us out this morning.
Yeah, it's going to be interesting to see how markets react, particularly the new crop soybeans and new crop corn. Tim's maps are pretty impressive with that rain east of the Missouri River over the next number of days through the weekend. So it's going to be interesting to see how the new crop contracts, how the new crop markets of both those corn and soybeans play this, how traders react to this. So it'll be interesting to watch. You know, particularly if we start to see some commercial pressure building in those new crop spreads. So certainly something to watch. As for diesel fuel, as for the energy sector as a whole, this is a bullish seasonal time of year where we normally see all of the markets moving higher, but they've been really struggling. We get these big pops up where they jump and then all of a sudden they come back down. Distillates is one of the key markets here. Again, as U.S. producers are looking to either lock in what they need for the rest of the year, or if they've already locked it in, maybe needing to add some more. So, certainly something to watch. It's just struggling to build this seasonal uptrend. Reasons why, yes, we continue to see headlines of OPEC Plus extending their production cuts. No surprise there. It's a political move. But on the other hand, we also see U.S. production of crude oil also going up. So, we seem to be offsetting this market, and right now it's got the futures in a bit of a stalemate.
Well, and it's really interesting because it's that time of the year where we're going to use a great deal of it for our farmers and ranchers here coming into the planting season. So it's of real interest to me to kind of see that. But seemingly like we've had a very low refining capacity, and I pretty sure when I came back from Chicago, everybody said there would be ample supplies out there. But we are still firming just a little bit in all of those energy markets, are we not?
Yeah, we are. Over time, if we look at just price direction over time, we are still seeing them going up. And as you showed the distillates market this morning, we saw the nearby contract gaining slightly on the first deferred. So we do have commercial buying coming in. We still have an inverted, or in New York terms, a backwardated forward curve in heating oil. So there is bullish supply and demand. And again, that's not unusual for this time of year. It's we come out of the winter and everyone thinks, oh, we're not going to see that demand for heating oil, but that's not the case, particularly across the Midwest, as demand for diesel and everything else starts to heat up again.
Absolutely. And we know how important this is simply because of what it relates to our grain markets now with our biodiesel and our ethanol. So, Darin, stay with me. We're going to go away and take a real quick commercial break. We'll be right back talking with Darin Newsom. Stay with us. Welcome Welcome back to Market Day Report. I'm Chris Swift. I know that the livestock saw both sides of unchanged yesterday, but we did close a little bit lower. I'm anxious to see how we're going to start this morning. Well, let's see how we closed yesterday first. The April contract at 186.67, down 177, and I know that we're last established cash trade 183, 184. The June contract down 142 at 182.57, out to the August down 77 at 181.92. The feeder market was soft as well. The March contract now into delivery with the feeder cattle index currently at 246.38. We're still carrying about a $5 premium on the March contract at 251.55. It was down $1.42. The April down 225 at 255.75, and the May contract down 240 at 257.77. And the hog market was mixed. I know April was down sharply, down 180 at 86.27. The May contract was down 7, 91.97. June and July were a little bit higher, 102.12 up 7 on the June and 103.30 up 30 on the July. I'd like to invite my guest back in, Darin Newsom. Darin is with Barchart. And Darin, anything really stand out to you? We've had a lot of volatility in the cattle market here recently. Any one particular thing stand out to you?
I think what you were mentioning there, the cash indexes in relation to those nearby futures contracts, and how we had mixed results at Monday's close. We saw some commercial selling. I think it's a result of a little bit. Basis seemed to be a little bit out of line, futures in relation to cash. So we had some commercial selling coming into those nearby live cattle contracts. Again, it's too early in the week to see much cash development, as far as this week's trade. So commercials taking a little bit of time to sell, certainly dropped in the nearby contracts. And then it was just the flip side of that in the feeder cattle, where we saw the nearbys actually gain on deferred issues. So I thought it was an interesting session Monday. Again, nothing overly surprising. I think what stood out to me at Friday's close was that we had bullish technical patterns on live cattle and bearish technical patterns on feeder cattle, and so now we have to spend this week sorting that out a bit. As far as lean hogs, again, it looked like everything was centered on that April contract, and again, most of it seemed to be coming from the commercial side, taking a bit of a breather after the strong run of late.
Well, and two, we know that the hogs are a cash settled contract. So knowing them that they have to go down either that index has to come up, and it's really got to come up a lot to be able to meet some of these expected prices on the futures there. I tell you, Darin, I also saw something interesting last Friday. We gained a tremendous amount of open interest in the live cattle market, and to me that's very interesting simply because those new buyers out there are buying at the top of the market, and the new sellers are selling at the top of the market. Do you have any kind of expanse on that?
Yeah, I find that interesting as well. We are seeing open interest increase, and in the live cattle market, we saw open interest increase while it was moving higher. That's usually a bullish sign. If you've got fund money coming into the market, and some of this could be tied to the continued strength of U.S. stock indexes. So, there's always that connection between the two markets. So, right now, funds are showing they are not afraid of the live cattle market. They're not afraid of the fact that basis is a little bit weak, cash in relation to futures. It could be a little bit of a tentative position. We'll see how long they're willing to hold it.
All right, good deal. Darin, I certainly do appreciate you taking the time to be with us this morning as Darin Newsom, and he is with Barchart. And Tammy, good morning to you.
Good morning. Happy Tuesday.
Yeah, absolutely.
Good to have you here.
Yeah, it's good to be here. So, yeah.